NASDAQ was up 8.2% in 1 week. So huge gains in the stock market, really based on nothing but hope, right? That the trade war is going to come to an end, right? Which again is an admission that the trade war is a problem, because when the market rallies is when they think it might be over. So to the extent that it's going to continue, because the tariffs, right? The end of the trade war means the tariffs go away, which is an admission by the market that the tariffs are bad, right? The tariffs are bad for the market. They're bad for the dollar. They're good for gold, because whenever they talk about getting rid of the tariffs or lowering the tariffs, the markets go up, gold goes down, the dollar goes up. So the market mechanism is saying that tariffs are bad. And the longer they're here, the worse it's going to be.
In today's news recap, silver price jumps to near $33 as U.S.-China trade tensions ease. Silver price trades firmly around $33 during North American trading hours on Wednesday. The white metal strengthens as fears of an intense trade war between the United States and China have diminished after President Donald Trump signaled the possibility of a deal with Beijing. Discussions with Beijing are going well, Trump said on Tuesday while addressing reporters at the Oval Office, and showed optimism that both nations will reach a deal. Trump added that tariffs on China would not be as high as 145%, but they wouldn't be zero. Theoretically, easing global economic tensions reduces the appeal of safe haven assets like silver. However, the metal is rising due to its industrial demand. Silver has applications in various industries such as electric vehicles, electronics, power and cables, mining, etc. Financial market participants expect that easing tensions between the world's two largest powerhouses will favor both economies. Meanwhile, the intraday corrective move in the U.S. dollar has also supported the silver price. The U.S. dollar index, which tracks the greenback's value against 6 major currencies, surrenders initial gains and falls back to near 99. The USD index gives up intraday gains, even though Donald Trump has pushed back fears of sacking Federal Reserve Fed Chair Jerome Powell. Still, he is frustrated with Powell for holding interest rates too restrictive. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
For the markets, it really started on Turnaround Tuesday, but it lasted the entire week. Now, I don't think it's a permanent turnaround. I think it's a bear market rally, a counter-trend move in pretty much all of the markets. And this is how bear markets work. You get some pretty big short-term counter movements that kind of serve the purpose of creating a false sense of hope that the market has bottomed out. And so some new longs get suckered in. You get shorts covering, right? They're throwing in the towel. And I think that's what happened. It started on Tuesday, but that followed Monday, where the Dow dropped another 1,000 points. And we had a big drop in the dollar, a rally in gold. And the catalyst for that day's decline, I think, was Donald Trump's off-the-cuff remarks on Truth Social. I don't know how much forethought went into this post, but he basically started calling Jerome Powell names, like they were at a playground. But he, called them too late, Powell, and basically said that he Mr. Loser. He called him a loser. And he said that Powell needs to cut rates and he can't go soon enough. We got to get rid of Powell. He's screwing up, by not cutting rates. And so the markets didn't like that type of pressure on Powell from the White House to not only cut rates, but risk being fired if he didn't cut rates. And so the markets were reacting, I think, to those statements. And I think what happened, especially looking at what was happening on Monday night, because all of those trends continued on Monday night. In fact, gold hit a new all-time record high. It was within $10 of 3,500. That's how much gold had gone up. It was above 3,490. Now, you may expect some profit taking at a round number like that. We were almost halfway between 3,000 and 4,000, and we had only just breached 3,000 like weeks ago, and now we're almost halfway to 4,000. But the dollar was getting killed. The euro was above 115. There was a 97 handle on the dollar index. Stock futures were selling off. Bonds were under pressure. They didn't make new lows, but they were on their way. And so I think looking at what was happening in the markets, the advisors to Donald Trump got to him and said, we need to do some damage control. You need to walk back that Truth Social post. And so on Tuesday morning, early in the morning, Donald Trump said, hey, of course I'm not going to fire Trump, Powell. He's going to be there until the end of his term, or I'm not going to do anything with Powell. And the market had a huge rally on that. And, it's hard for me to believe, with all of the market savvy people that are in the Trump administration. A lot of people have come, from Wall Street, right, that are there. And they know that the markets are going to move big on comments that come out of the White House, even though nothing actually happens, right? Just somebody saying something, not actually doing anything, but just a post on Truth Social can cause massive swings in the stock markets, in the currency markets, in the crypto market. I'm sure there are people in the Trump administration that are trading off of this.
In today's news recap, Asia gold discounts in India soar to near 9-year high. Chinese premiums jump. Gold discounts in India jumped this week to the highest level in nearly 9 years as record prices deterred buyers, while premiums in China rose to a more than 1-year peak, leading to increased shipments to the world's largest bullion consumer. Indian dealers this week offered a discount of up to $80 an ounce over official domestic prices, inclusive of 6% import and 3% sales levies, the widest discount since July 2016. Last week, the discount was as much as $74. Jewelry sales have taken a hit with prices going up. Shoppers aren't buying like they used to, and jewelers all over the country are feeling the slowdown, said Surendra Mehta, secretary at the India Bullion and Jewelers Association. Jewelers are not active in the market as they have received fewer advance orders from retail buyers for the Akshaya Tritiya festival, said a Mumbai-based dealer with a private bullion importing bank. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
He came out and he did that damage control. And so that reversed gold. So gold went from being up like $90 that night to down, $50 or something. It was a big sell-off. And then it continued. Gold was volatile, up $50, down 50, up 80. It was all over the place. It ended up down on the week, gold, about 3% on the week, but it still closed the week above 3,300. I mean, so you're talking about a high price of gold above 3,300. And I know it's down tonight. Last I checked, it was down about $20. Now it's only down about $11, 33.08. So this is still a very high price for gold. Silver at one point on Monday night, the gold silver ratio was like 107, 108. I mean, that was a new record low for silver Silver turned around. Forgot to check the silver price, but silver was not down nearly as much as gold. And so silver gained on the week. Let me take a quick look at what silver did. Actually, silver was up. It was up 0.5%. So I think that there's maybe a chance. We'll see. I mean, I've been saying this and it's been premature. Maybe silver is bottom. We'll see. But silver actually rose 0.5% on the week. But the big movers were in the stock market. And it wasn't just because of the damage control that was done on Tuesday, but we got more crafted statements from the Trump administration, especially, I think, from Scott Bessent about the trade war and the tariffs, and some positive statements that I think the tariffs will come down soon. Things are going well. The negotiations are going good. So a lot of positive comments. And I think we're all a bunch of BS, right? But I think these comments were deliberately floated out there to get the markets to rise, to get them to think, oh, okay, it's almost over, right? The war's gonna be over, and we got this big relief rally, really on nothing. The Dow Jones on the week, based on not only the statements about Powell not being fired, but on the trade war maybe coming to a swift ending, right? Because all these great deals are being negotiated, and obviously these high tariffs on China are unsustainable, right? That was an admission. The Trump administration said these tariffs are unsustainable. And the reason they're unsustainable is because we can't sustain it, because we would basically be cut off from the Chinese imports that are so important to the economy, right? And that's why they're unsustainable. And so, but who knows, right? How long they're actually going to be there. And even if they lower them from 140% to 50%, I mean, it's still a big problem for America, right? It's problematic for China too, but it's a much bigger problem for the United States than it is for China. And as far as I'm concerned, in the long run, it's the best thing that can happen to China, because China needs to stop trading with the United States to the degree that it does, because we're screwing them over, because we're not paying, right? We're just giving them IOUs that are basically not going to be worth anything. So their economy is getting all screwed up, maintaining this vendor financing of a customer that's never going to pay. And it's doing real damage to their economy. And the sooner they can repair that damage, the better for them. Anyway, so the Dow was up 3 points.
What do you think of Andy Schechtman's call for gold surpassing $4,000? Is he spot on, or do you see things unfolding differently? Do you think we're finally entering that explosive bull market he's been predicting, or could this just be another peak in the cycle? More importantly, are you stacking right now? Are you positioning yourself in physical gold and silver, or exploring mining stocks instead? Let me know your thoughts below. I'm reading every single comment. And remember, stay vigilant. The financial landscape is shifting fast, and opportunities like these don't wait. Now check out this video right here, and I'll see you on the other side.